All right, good afternoon. We are looking at US 2000. 2:30 p.m. the New York session opened. We're trying to take advantage of that particular time. As you can see, price has been moving on an uptrend. Look at the 4 hours. If you look at 4 hours, you see that price has been moving in an uptrend, creating new highs, and higher lows. Currently, price is trying to push to this particular region, and that looks like a strong resistance, right? So there are two things that are likely to happen when price gets to this particular price level. It's either price breaks above it, or that resistance is too strong for the price, and it does what, and it pushes the price down. You can see that there's been like a retracement here. Price has been, as on its journey to create those highs, it keeps retracing. So this breaking structure was due to NFP, but after the NFP brought US 2000 down, you can see that it rallied back up and still continued in that uptrend, and so it is pushing towards this weak resistance. And like I said, technically, what do you expect at a resistance? You're expecting to sell at a what, at a resistance. So is either price breaks above this weak resistance and keeps going up, or it gets this weak resistance and cannot break above it, and then it starts to do what? It starts to go down. So for we are in an uptrend. So we are still looking at what, at buys, right? So if price is able to break and close above this weak resistance, now when high impact events come out, like this one that happened, the break and close doesn't really apply, right? Because it's high impact. It will just, if you imagine, if I was waiting for this particular candle, if I was waiting for this candle to close, let me show us that candle. If I was waiting for, yeah, this candle, is it this candle? Yeah, if I was waiting for this particular candle to close, can you imagine how long I would have waited, right? So when high impact events come out, you might just be looking out for break, right? So if price breaks above this particular region, you are looking out for a buy. If price breaks, so two things: if price breaks above 1939.3, or if price breaks and closes above 1939.3, you want to take a buy. Um so this is like the resistance. This candle starts to go up, and then a candle breaks, and then on the next candle that forms, you want to enter your buy, and take it all the way to 1950.8. Now, like I said, so that price breaks above and goes to that resistance, or it does what, or it comes to this weak resistance and does what, starts to push what, down. Because like we always say, normally you want to sell at resistance and buy at what, at support. So once you begin to see bearish candles, now you are seeing bullish candles. Once price starts to is bullish, and then it starts to test and tries to break, but it cannot break, then you start to see red candles coming down. If a red candle comes down, on the next red candle, you want to enter a sell on the next red candle and take your profit at 1922 point what, point 9 for the sell, right? So for the buy, if price breaks above this weak resistance, you want to buy and take your profit at 1950.8. Then for the sell, um if this weak resistance is too strong and it starts to come down, you want to take your sell after a bearish candle has formed. If a bearish candle has formed below this weak resistance, on the next bearish candle, you want to go in for that what, sell, and take your profit at 1922.9. That is my take on US 2000.